Folks, welcome to Sunday Night Futures Live. I apologize for being late. This daylight savings time totally screwed me up. I was like, it's so bright out, it can't be 6 o'clock. So my apologies. Uh, I'm I'm going to get right to it. We have a lot to go over, But first, let's start off with a little bit of humor. Get ready for the copyright strike, but oh well. There we go.
What do you mean the bank is out of money?
Insolvent? You only have enough cash for the next 3 customers?
Hey, what's this? Just a second here. No, I don't have your money here. It's in Bill's house and Fred's house.
Hey, what the hell you doing with my money in your house, Fred?
Okay, as you can see here, that's Silicon Valley Bank. Let's go to comments and let's go to the future. Let's say hello to people. And again, my apologies for being late. Westlaw futures also open higher on Friday. I haven't even taken a look at the futures yet. Bitcoin up almost 5% as well. We'll check that out. Hey, Yoga Mac, I think you're right. Loaded SQQ and no fear. Just think the suppression of gold by Bank of International Settlements was very stupid. Joel, hey Bob, your thoughts on BX and KKR? We'll check them out. Trader Isaac, hello, sir. I haven't seen you in a while. Buster Stacks, hello. All right, let's get to it. Let's get to the futures action. I have not looked yet, but we are getting a higher move. I will tell you why we are getting a higher move in a moment. But 15-minute chart, I'm glad that they're rallying. Because I look forward to fading this rally. So we have the E-minis up about 0.2%. The Russell 2000 already a little bit of a fade here. Now negative. We opened up strong, reversal. They're fading the rally. The NASDAQ 100 holding gains up nearly a half percentage point. We're above resistance. Do we hold it? Maybe. Let's create some alerts here. The S&Ps are giving back a lot. They are not holding gains very early. Let's take a look at the US dollar. The dollar is dropping like a rock. Big move lower on the USD. We got to take a look at gold. I can only think that gold has got to be moving up higher, and bam, it is up 1.44% on the session. A bit extended here, but I think that gold is going to go up higher. We're going to be talking about the reasons why. For every reason why equities are up and yet fading this evening, gold is rallying and probably will continue to rally. So more to come. Stick around tonight. We have a lot to go over. E-minis just made new session lows. They are now negative on this session. Let's see whether or not they fill the gap. Our alert is set. So we talked about gold. Let's talk about, do I have silver up here? SI. Big move up higher on silver. Up nearly 1.75% on the session. Tom, I'm looking at this. Schwab has SIVB exposure. Do you know what kind of exposure? Any documentation you have? Any links you could share? I'm interested in trading Schwab, which is why I ask. First Silvergate and then Silicon Valley. You want regulation? Well, here it is. There is no regulation. Okay, we went over the dollar. That's gapping down. Let's take a look at the yen, ripping up higher. My guess is that the euro is doing the same. And it is. Crude oil prices down over 0.5%. Let's talk about commodities. Cattle price. Let's go to the weekly chart. Cattle prices last week cracked. They broke support. They were looking as if they were ready to break out and have a continuation breakout. That failed. This is last week's price action, not this week's. Do we break to new lower lows? Because cattle is setting up as a short. Thank God. I love my New York strip steaks, but man, they're expensive. If you guys think I'm drinking scotch, I am not. Canada Dry Diet. Okay. Let's go to other agriculture. Soybeans holding weekly support. Not much to talk about there. Wheat nosediving. Taking a nosedive. Corn also breaking lower last week. So these are going lower. Let's check back in with equities for a moment. You know, I didn't go over nat gas. Nat gas, this is a weekly chart. Let's go to the 15-minute chart. Moving lower on the session. Let's go back to equities for a moment. See how we're shaking out here. All right, so we have a bit of a reversal bar on the E-minis. They're trying to break them out. They continue to get rejected at around that 39.20 mark. Let's go back to the NASDAQ. The NASDAQ 15-minute chart. We have a breakout, a retest, and a follow-through. Looks like we're going to get more upside for the rest of the evening. We do have a resistance level up here. Let's create an alert. Let's see how strong this rally is. Okay. If we have time later on, we're going to check back in. We're looking at the 10-year yield lower left here, breaking down volatility, moving lower. A very powerful week last week for volatility. I think that we're going to get a pause here. We're extended. However, I think that volatility is going to pick back up. Any rally in equities into resistance is to be shorted. So let's get to it. Let's go say hello to people. We went over that one. Pete, hello. Tim, top of the evening to you. First Silvergate, then Silicon. Yeah. Talon, welcome. Franklin, welcome. E-mini is trying to fill the gap. I guess it will go higher. Okay. We just have the NASDAQ broke to new higher highs versus resistance. Let's go check it out. There you go. It broke through. NASDAQ now up 1.1416%. The next resistance level here is at 12,137 on the NASDAQ 100 futures. Let's create an alert. At some point in time, you're going to see some sellers moving. I think we just blew through that resistance level. I didn't even get a chance to type it out. This is probably going to go off right away. Yep. All right, so we're into resistance right now. There's a lot of resistance up here. So let's see whether or not it has the fuel to break out and above that resistance level. We're at the doorstep of supply above. The question is, do we have the demand below to break through resistance? God damn it. All right. I think we're going to get stuck in this trading range here. Okay, let's talk about what's going on. I've spent a good portion of the weekend talking to people, studying, reading, and I can tell you that what we're seeing right now it's not a crypto story entirely. Crypto is going to get the blame. Crypto is going to get the blame. No doubt about it. The federal government hates crypto because it competes with the dollar. They hate it. They want to ban it. They want to regulate the heck out of it. But they are going to blame everything on crypto. But let's get to it. Let's talk about, first off, what we normally talk about. Let's talk about valuations. We remain very extended on valuations. Despite last week's sell-off, where we are 24% on the Buffett indicator beyond historical trend. Still expensive. There's no bargain out there. People are on CNBC are going to try to take parking space up in your head and saying the forward-looking PEs are cheap. Yeah, they are. Have the analysts downgraded their expectations? Have they calculated in all the companies that are going to go out of business and the supply chain impact of these banks blowing up? I highly doubt it. So I prefer to go with rear view mirror data and the Shiller PE ratio. We are at 28 versus historical mean of 17. We have a long way to go down to become fairly valued, and I think that we are going down. Now, these two characters here were the faces that you would match up in your memory with the financial crisis. These are the guys that were somewhat intelligent. They were part of the Bush administrations, their Wall Street elitists, warmongering neocons, and at least they were intelligent. Now, I have little faith in the government and the participants that are supposedly going to fix this problem, and we're going to talk about that more in a moment. So SVB latest developers, live blog, regulators weighing bailout of all unsecured SVB depositors to prevent bank panic. They're going to do it again. You want to know why the US dollar is tanking and the price of gold and silver are ripping through the roof? They are going to bail out depositors. These are not just your mom and pop depositors. These are wealthy individuals. We're going to talk about that. This is from Graham Stephan's Substack. So everybody's going to blame crypto. It is not a crypto story with Silicon Valley Bank. What they did was corporate malpractice. What they did, Silicon Valley Bank parked $100 billion of its funds in U.S. Treasuries with a maturity of 3 to 4 years and locked in a 1.79% return in 2021. The bet in itself was not risky. That is wrong. It was very risky. But the sizing and the timing of the bet was a brash move. So their play is that we were going to stay for 3 to 4 years at those rates where they locked in for 3 to 4 years or lower. That was their play. So his argument here, and I like Graham Stephan, his argument here is that was not a risky bet. Are you kidding me? $100 billion of your depositors' money? So by locking up the funds, SVB was betting the Federal Reserve would not hike rates very slowly in the coming months. They got that prediction horribly wrong. So this is not a difficult problem to have identified in the outset before placing the bet. You had supply chain disruptions. Inflation was already on the rise. Wage growth was growing. People didn't want to work. Prices of everything were moving up higher. Everybody knew the Federal Reserve was going to raise rates at some point in time aggressively. Why they wouldn't ladder out? Typically, what a well-managed bank would do is that they would ladder out 2-year treasuries, 3-month treasuries, 30-year treasuries. They would ladder them out. So there's always something expiring, and you could roll it over or have that cash to put to work. They put it all on one bet. One bet. This has nothing to do with crypto. So here we go. Senior SVB risk manager oversaw woke LGBT programs. I have nothing against LGBT, LMNOP. I could give a rat's you know what. Keep it out of the workplace. Keep it out of the workplace. She spent more time focusing in on woke ideology than focusing in on her job. She was lazy. She was incompetent. She should never have been in that role. And now we are going to pay the bill, and they are going to bail out these depositors. Because going back to this Substack, take a look at the client roster here. Out of SVB's clients, only 2.7% fall under the FDIC bracket of $250,000. Folks, I don't have a Harvard degree, nor do I have a degree from National Community College here in Long Island, New York. But I know that the FDIC cap is $250,000. But all these people here, these companies, in this column here, it shows you the percentage of assets eligible for FDIC insurance. Dime Bancorp of America, 30%, reasonable. And they're all in that 25, 30% if I had to average this out. This company here only had 2.7% of insurable deposits. Why? This stands out. This stands out. Why weren't the regulators in there all over them every single day if they really cared about the depositor? More than 400 companies are exposed, and more than 100 cannot make payroll in the next 30 days unless there is a quick resolution. Yeah, there will be. We are going to bail them out again. 37,000 customers accounted for more than 74% of the bank's assets and had an average account size of over $4 million. So they were able to garner enough wealth, but they didn't have the smarts enough to be able to say, you know what, I better spread this wealth out across multiple institutions because FDIC insurance is only going to cover 250 grand of deposits in this bank. That's not my fault. It's not your fault. I feel bad for them, but why do we need to bail them out? This was public information, yet we are going to bail them out. And what's happening already? Let's go back to what's going on to the US dollar. You think inflation is bad now? You ain't seen nothing yet. This is just the beginning. This is what they want. They want crisis. They never let a crisis go to waste. This is what they want. And we are going to pay. Think about this. When the dollar drops, inflation goes up. Why? Because the pricing power of our dollar diminishes. It doesn't really matter that much here in the United States, but if you're buying goods from across the seas, well, if you have the euro going up and the yen going up, they're major exporters. If you have a cheaper US dollar, it's going to cost a lot more to purchase those products because we don't manufacture anything here anymore. We have to import it. This is insanity. This is insanity. And the traders are telling you right now, get out of dollars. Get out of dollars. And get into precious metals. I'm actually surprised that the price of gold coming in here a little bit, still up over 1%. That the price of oil is down, but I think that's because they're just factoring in that we're going into a hard recession and demand is going to drop for oil. Otherwise, oil would be up because it's denominated for now anyway in the US dollar. So moving on, I have a lot to get to. So companies, if you're wondering out there why your stock may be looking wonky, it's not acting right, it's being sold hard, it may have exposure to SVB. So case in point, Roku disclosed that 487 million or 26% of its cash is held in SVB, with those deposits largely uninsured. What happened to Roku? Last week, down over 8.5%. This is going lower. Maybe you'll get a pop tomorrow because they're going to get bailed out. Etsy, another one, said Saturday it couldn't pay sellers due to funds tied up in Silicon Valley Bank. Etsy last week down nearly 12.75%. Now, other banks that may come under pressure, a couple of these are in my backyard here. Dime Community Bank Corp, Hauppauge, that's on Long Island here. New York Community Bank Corp, that's in Hicksville on Long Island. So these are the names. If you have money in these banks, be careful. Make sure you're under that $250,000 limit. Do a print screen of this so that you have it. As a matter of fact, let me share the link for somebody watching this on the replay. And there you go. Tonight sounds like regulators are closing. Is that a fact? Is that a fact? You have a link to that, Tim? Even local savings and loan banks are pushing ESG. My savings and loan bank, yeah, this ESG is cancer. It's AIDS, along with this woke ideology. But I'll tell you right now, this is going to be the end of it. Yeah, I didn't go over Bitcoin. Thanks, Yoga Mac. It just reminded me. Yeah, Bitcoin screaming up higher. Again, this is less of a story about crypto than what it is about the Federal Reserve raising aggressively and, frankly, just incompetence. Again, every Warren Buffett called this so right. At the end of every market cycle, when the tide goes out, you see who's swimming around naked. And sure enough, here we are yet again. I've seen this in 1992, the S&L crisis. This is going to be very much like the S&L crisis. You had then the 2000 crisis. Then you had 2007, 2008. Then you had 2020. What did Jeremy Irons say in Margin Call? Fat cats and happy dogs. We just can't help ourselves. Here we are again. But there are going to be great opportunities. There are going to be great opportunities here. I hope that they jack this market up through the roof tomorrow morning. Because guess what? My small short position right now is going to get a heck of a lot larger. So oddly enough, or not so oddly enough, they have a closed board meeting scheduled for the 13th. If you're wondering why equities are rallying right now, it is not a relief rally. They are rallying on Federal Reserve action tomorrow. Gold is telling you that. Silver is telling you that. The US dollar is telling you that. Equities are telling you that. If the market is telling you that, you got to listen. Now, for scale, for context, these regional banks have massive amounts of deposits. This is not a small story. You're talking about trillions upon trillions of dollars in deposits. If you see I guess the Treasury is going to have to do something and bail out these banks. Because if they do not stop this bank run, that it will happen tomorrow, this will spread. This will spread. And look at the trillions that are going to have to be bailed out, at least in some small portion. And guess who foots the bill? We do, and it goes onto the Fed's balance sheet. That blows out again. And here we are as we proceed into the so-called fix. The people that caused this problem are now charged with fixing it. It's the same way it is over and over again. Go back in history to 2007, 2008. The two guys that caused the financial crisis, Senator Dodd and Congressman Frank, those two guys wrote the legislation afterwards to fix it so it wouldn't happen again. Here we are again. So this is what we have to look to for our salvation, and it begins with none other than good old Jim Cramer. Thank you, Tim, for forwarding this to me.
The ninth best performer year to date is SVB Financial. Don't yawn. This company's a merchant bank with a deposit base that Wall Street had been mistakenly concerned about. Silicon Valley Bank recently bought one of our favorite research firms, Moffett-Nathanson, and it's become less dependent upon private equity and venture capitalist offerings. Wait a second. Those dried up last year, they could come back. Yes, some of them come back here, but the stock directly affects an oversold position. Stock was the fourth worst performer in 2022. I think the fears were not justified, and it's a very compelling situation. Hey, by the way, long-term private equity and venture capital, they're not going away. Being the banker to these immense pools of capital has always been a very good business. Stock's still cheap. Now, you have to remember that a stock that falls 66%, like SVB Financial did last year, it takes it a lot more to recover. After losing two-thirds of your value, you need a 200% gain to get back to even. This is arithmetic. Some people call it geometry. So you could argue SVB's nearly 40% rally this year is barely a drop in the bucket. And that's how I want you to think it. I think it's also a good example of why these bounce-back moves might be far from over. These stocks could have more room to run, especially if you think they were driven down to artificially low levels by tax loss selling, artificial dumping, like we saw.
Okay. This was on
the ninth best performer year to date.
This was on February the 8th. Let me take a look. Let me show you the chart. This is on February the 8th. The corruption is just so in your face. All right, so here's February. All right, so back then, here's your uptrend channel. We broke down this chart. If I would have looked at this on February the 8th, when good old Jim Cramer gave us his wisdom, here's what I would have told you. Here is February, at least the week of February the 8th. Here. So we had a double top. We were flirting with a breakdown below support. This is not a chart, or even back then, it was not a chart that you would want to buy with your enemy's money. You would want to be avoiding this like the plague. And here's a guy that gets paid millions of dollars a year, yet he has the audacity to go onto television and say to go out and buy this stock because it's cheap to the average working American. You don't have institutional investors listen to this guy. They know that he's a huckster, in my own opinion. And sure enough, yet again, another opinion that he had coming. And this is a short. I'll tell you when it was a short. Not necessarily when he was talking it up. I won't say that. Actually, I'm sorry. I'm looking at the wrong. This is a weekly chart. Duh. I'm looking at the weekly chart. Yeah. So he's talking about, here's February here. Here's a stock that has been beaten. I apologize, folks. I got my year wrong. Here's a stock that has been beaten over the head and in a clear and defined downtrend channel. Maybe he did have a technician on here saying, yeah, it broke out above an upper band of resistance. Well, why not wait for the pullback to see whether or not it's going to hold this retest, which is what I always say to do. Always do that. Wait for the pullback, and then before you get aggressive with the trade, wait to see whether or not you could take out the prior highs. It never did it. It was a failure, an utter failure. Jim Cramer, yet again, strikes. And nothing's going to happen to him. Not that there should be anything that happens to him, but his ratings should drop off of a cliff, yet apparently they do not. So Fed meeting tomorrow. And here is our esteemed Janet Yellen getting ready. She's priming the decks for a bailout of depositors. But where was Janet Yellen only a few days ago? Just like with the risk manager over at SVB dealing with woke propaganda, while our esteemed Treasury Secretary, former Fed governor, chairwoman, I should say, she was over in Kiev, reassuring them that they were going to get relief from the American taxpayer so they could pay their pensioners over in the Ukraine. God forbid they helped out the average American. So this is the type of leadership that we have here. Folks, I love my country more than I could possibly ever tell you. I'm a patriot. I bleed red, white, and blue. But we are no longer a serious nation. We have complete and utter incompetence in leadership. These people are not focused on the greater good. They are focused on driving an agenda, and this firmly empowers them to do all sorts of maniacal, crazy stuff, all for the worse, not for the better good. So what's going to come out of this, I do not know. but we have a Treasury Secretary who is out of it. We have a president that is focused on in excess of $7 trillion new budget and what it's going to allow for. They won't fund additional psychiatric care for our great, great, great veterans, but they will fund sex change operations for our veterans. We're going to pay for this. Also, it's pretty much been validated now. It's as bad as we thought. CCP money flow, Communist Chinese Party money flow to Biden family, according to bank records, documents obtained by the House GOP. So we are heading into a crisis. We have an incompetent and inept president, along with an incompetent and an inept cabinet, a corrupt cabinet, a corrupt president. We have a Federal Reserve chairman that has, with probably the best of intentions, raised rates in an effort to try to resurrect Paul Volcker. But what he failed to recognize is the fact that corporate America is addicted to low yields. SVB assumed that would never, ever change. They locked up their money at 1.79% for 3 to 4 years, and now they are bankrupt. This is only going to continue. And forget about 3/4 of a basis point hike, a half basis point hike. We're going to be lucky if we get a 1/4 basis point hike in March, and that is going to send the dollar into a nosedive and the price of gold and silver up higher. FDIC cannot save, this is from Grant Cardone off of Twitter, cannot save the banking system. If you guys think that we aren't printing money again, you are naive. So right. No matter what your opinion is of Grant Cardone, he's a controversial figure, but he's right. They're going to have to print money. They're going to start at the printing presses again. That's it. FDIC has approximately $124.5 billion and a $100 billion line of credit. So let's just round it up. Let's say they have $300 billion of capital to bail out some banks. Okay. What's the size of the... We're talking trillions. We are talking trillions. I'm not saying that all of this is going to go bad. It only takes a fraction to eclipse what the FDIC is able to pay out. They are going to print like mad. Bill Ackman. Whenever Bill Ackman talks, for some reason or other, they treat him like royalty on Twitter. But I remember in 2020, he went on CNBC, he was posting on Twitter, hell is coming, blah, 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 blah. As it turns out, after he closed out he didn't tell anybody he was short the market at the time, but after he closed out his short, I was short the market. So keep in mind whatever Bill has to say. So from a source I trust, at SVB, financial depositors will get 50% on Monday, Tuesday, and then the balance based on a realized value over the next 3 to 6 months. If this proves true, I expect that there will be bank runs beginning Monday. He could be right about that. If anybody loses $1 on this bet, they're going to be bank runs. No company will take even the tiny chance of losing dollars of deposits, true, as there is no reward for the risk, absent a system-wide FDIC government deposit guarantee. That's what he wants. That's what they're going to do. More bank runs begin on Monday. This is Ackman sending an uppercut to the Federal Reserve. So possibly Ackman covered his shorts of the banks on Friday, got long, and now he's looking for a rally on the banks on Monday. That's how I perceive Ackman. So I've been coming on here for, 2 years now, and for at least the past year, for the most part, on Thursday or Sunday, I go over this chart at least once a week, and it is the yield curve. And I have never proclaimed that I knew what the what the cause of the bubble was going to be bursting. I just knew it was something. Something had to happen. And it's here. It's quite possibly here. So what's happening in the yield curve world? And for those not familiar, the yield curve has predicted every single recession going back to 1955. You don't worry about the yield curve when it's inverting. You're worried about the yield curve when it's steepening. What happened last week? Oh, it steepened. It was extremely low, and then it rallied off the low. Let me show you the chart. For illustrative purposes, members, I'm going to bore you to death because I already showed you this chart multiple times last week, but it's worth repeating. On, I believe it was Wednesday of last week, we were down here testing this lower band of support. Now we have retraced. My bet is that by the end of this week, we will have broken out above the upper band of resistance. That will mean that on a monthly time frame, by the end of this month, I'm predicting that we will have a positive candlestick, if not a breakout above this upper band of resistance. This is what happens when the Federal Reserve pivots. Equities do not rally for long. They'll rally on the hopium that the Fed cut will give them. They will rally on the bailout by the FDIC, by Treasury, by the Federal Reserve to depositors. People will think that the problem is all gone, done with, don't worry about it, it's all good. What happens to inflation? Has anybody forgotten about that? What's going to happen to inflation? Dollar dropping. Inflation was hot last week, the week before last. Inflation is going to rip. And I'm going to be shorting the market. We already have shorts on. We will be shorting with reckless abandon. And we will be buying more gold mining stocks. And there's going to be a lot of money to be made here. A lot of money. But if you chase these rallies, in my opinion, if you chase these rallies, you buy these rallies, you are going to regret it. The VIX. This is the monthly chart of the VIX. We are positive. We were higher at current. We are down on the session. Check back in. Bitcoin holding up really strong. Yields coming off their lows. That didn't take long. NASDAQ stalling out. Could quite possibly break out. But the momentum has quieted down some. And the VIX, I know with my head in the way, you can't see it that clearly, so let's move it up here. The VIX, this is a 4-hour view, is dropping. 15-minute view, some stability, not much. Let's clear up all this. So I'm going to be watching this chart very carefully in the coming days. Because when we begin to break out on the VIX yet again, I want to have my short position in place. And it looks as though the NASDAQ may take another run at resistance at 121.50 on the NASDAQ 100 futures. That's the /MNQ. I think those are the minis. NQ, I think, are the not minis. Okay, let's take a look at what happened back in 2008 for a moment. Back in 2008, you'll see in this candlestick here, this is when Lehman Brothers went bankrupt. It was 1 o'clock in the morning, 2 o'clock in the morning. So it was prior to the open. And the equity market obviously closed lower on the session. You had some announcements from the Federal Reserve. All is right. Don't worry about it. We got you back, blah, 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 blah. Equities rallied. What happened? A massive failure, a massive reversal. Overlaid here in gold, what ultimately after going down with the equity market. But remember, gold has had a serious correction of late. So we do have already a correction in the books. Gold began to outperform for at least several months after that. This is a weekly view. And it took a while before the equity markets were able to play catch up. I lost it. All right, we're back. And as for the US dollar relative to gold at that time frame, the US dollar dramatically outperformed gold. Gold was going up, trending up, outperforming the equity market. We had the S&P 500 in Candlestick, and the greenback, the dollar, weakened dramatically. So I'm not saying this is exactly going to be the same game plan over again, but it certainly appears to be setting up that way. Gold outperforming equities, the dollar underperforming equities. Get ready, folks. This is no joke. Let's go to comments. Hope Kramer had a lot invested in SVB. Okay. Didn't Yellen say that there would not be another bank crisis in life? I believe she did say that. 20 houses to buy a house in 1929. If this was an agriculture bank in the Midwest, there would be no bailout. Well, technically, what they want to do is they want to say, we didn't bail out the bank, we didn't bail out the wealthy. They're going to make it sound as if they bailed out the weak and feeble small depositor, when in reality they're bailing out people with an average account size of $4 million and didn't have the sense to know that the FDIC insurance capped out at $250,000. So we're supposed to feel bad. And to be fair, these are small businesses as well, and they got to make payroll. I don't want to be so cold-hearted, but there should be some accountability on their part as well. Were they good stewards of their capital? The answer is no. No. If you have FDIC insurance capped out at $250,000, you ought to be more diversified with your capital. Simple as that. They failed at their fiduciary responsibility. Norwegian CL is better than Carnival CL in debt alone. Okay. Jody, hello. Dane, hey Bob, the fact that the CEO and CFO sold their positions just 2 weeks before the collapse, wouldn't that be? You would think that it was trading on inside information. I would think so. Certainly worth a look. I'm no attorney. Baba Pops, long time. When barber and taxi driver tell you to buy Bitcoin, it's time to short. Yeah. When Kramer posted JP Morgan is a fortress, I took long puts. Okay. Yellen looks like a villain in a That's awesome. Most government bureaucracies are populated with traitors and cowards. Yes. TARP 3 coming our way, sure enough. Signature Bank closed tonight. So that's a fact, huh? That's a fact. Hold on. Wow. Wow. So here's the headline off of, so I was right. Off of Zero Hedge. I was looking for a headline about Signature Bank, but Bitcoin and bullion surge after Fed bailout. Did they announce this? and Signature Bank, and well, basically any other bank. All right. The reaction in the markets is dramatic, with expectations for Fed rate trajectory collapsing, just as I said. Yeah, so just a few days ago, they were pricing in a 50%, 75% of a 50 basis point hike. That is now going away. Gold spiking up to 1900. Okay. History repeats itself all over again. Nothing about oh man, holy cow. The market's completely ignoring this. U.S. regulators said on Sunday it shut down New York-based Signature Bank. Wow. Oh, my God. The bank regulator said depositors at Signature Bank will have full access to their deposits. All depositors of this institution will be made whole. As with all resolutions of the Silicon Valley Bank, no loss will be borne by the taxpayer. I don't know how that's going to happen, but okay. All right. And they're still pumping Jim Cramer and his investing outlook. God help us all. Let's do some chart requests. Oh, I want to go over seasonality here a bit, folks. S&P 500. Let's talk about the seasonality. For the record, we are going into a back-to-back, seasonally very weak couple of weeks. We're up only 42% of the time over the past 13 years. This coming week, the following week, worse, up only 33% of the time. So seasonality, very, very poor this set of 2 weeks right now. So be careful. These are our charts that we're watching for the new trading week to trade, but to the short side, not to the long side. And I have the video posted on YouTube, so go check it out. And let's see what requests there are from our members: Eric, Apple, NVIDIA, Zoom. Okay. Folks, we're going to be using TrendSpider. If you're interested in having artificial intelligence as part of your trading software, I would strongly suggest take advantage of the 35% discount code below. They have a 7-day free trial offer. I believe in it so much, I give it away free to our silver and gold level members. So let's get to it. Apple. Apple held up fairly well last week. It held support. This is the weekly view. I'm neutral here on Apple. Had a failed breakout last week. I don't see a reason to buy it. Stokes are rolling over. I wouldn't short it. It's just off of support. Now, if we begin to break 147 per share, then it becomes a short down to 144.50. Stochastics are rolling over. I wouldn't buy this stock. I wouldn't necessarily short it either. Not enough reward for the risk to short it. NVIDIA. I'm looking to short NVIDIA. The options are very cheap. We are in an ascending wedge formation. We've been getting rejected at this upper band of resistance on a break. I already have my alerts set. We're going to be looking to short NVIDIA. In fact, it's on our list of stocks that we're going to be looking to short this week. Broadcom, Airbnb, again. We went long of Airbnb, then we shorted it. We made money both times. NVIDIA, BlackRock, a financial, DocuSign, Twilio, those names are what we're looking at to short this week. I hope they rally this market tomorrow, and we will look to take advantage of that irrational exuberance. So NVIDIA, I'm bearish on. Zoom, love the product. We broke out. That breakout had failed. We were in a descending wedge formation. Looks like it may want to drop back down into that formation. Weekly chart, it's not looking great here. We're at support. I wouldn't short it, but I'm not seeing a reason to buy it. Stochastics weekly time frame rolling over, another lower low. First low, second low, not loving it. Daily chart, a bit oversold on the daily time frame. I'm a little bit more bullish on the daily chart. You're probably going to get a brief rally here. Along with the rest of the equity market, this is, I screwed this up, but this is a descending wedge formation. And I think it's going to get resolved to the upside. Stokes are very oversold and they're beginning to hook up. I think you're going to get a short squeeze rally here, short covering rally, and it'll be time to get long, but don't stay long. If it rallies up to $69, I'd book profits and get out. I just listened to Bob, George Gammon, and Jeff Snyder. That's really good company. Thank you for throwing me in with those quality guys. Very, very intelligent people. Yes, please smash the like button. Thank you, Denny. Please smash the like button. It really helps me out with the YouTube algorithm. Thank you very much for the reminder, Denny. I'm horrible at that. I saw the VXX. That's the VIX on VIX. Also did a reverse split and ripped this week. I had long puts on SBNY at 60 strike and closed them. Congratulations. Oh, you closed them out Thursday. Oh, you had long puts. Did you make money? You probably made money. Don't beat yourself up. Yoga Mac. When the inverse bear volatility 3x does a reverse 4-for-1, then rips, it feels almost like another yes. Biotech typically bottoms out in March for seasonality. Biotech is getting killed right now. I will check out. You know, that's a good point. LABU really got beat up last week. Let's go to a monthly view. Oh, yeah, look at that. Good information. Really good information. This goes back only 7 years, though. Do we have more data? No, we don't have more data. All right, so it's thin data, but interesting data nonetheless. So good info. Thank you for that. Fed is in an emergency meeting going to bail them all out. Yep, again. But it's not going to cost us a penny. It's amazing how they do that. It's not going to cost us a penny. Not sure how typical anything is anymore. It's typical about how corrupt and in your face they are about it nowadays. I am well under 250K in savings in my SNL. Good for you. Wise. What do you think of these cash money market funds in CS that make like 3-4%? I will just share with you this. Money market funds back in 2007 or 2008, one of the two or both, they broke the buck. So if they're sporting a 3 to 4% handle, that's pretty rich. I don't know what they're doing to get that kind of return, but I would be very, very careful. I would be very careful. We have seen back in the financial crisis, the money market funds break the buck. So be careful. Jody, Boyle and QQQ. QQQ, I can tell you right now, is going down. I'm short of it. Now, I'm not basing it solely on the daily chart. I'm basing it more on the weekly chart, in that we broke support last week. And on a daily time frame, I don't have them up here, but we broke. If we go back to here, let's do this. Go to the daily chart. Ugh. We broke below the 200 and the 50-day moving average all in the same day. When was the last time you saw that with this index or any other stock, commodity, currency? I think it's weak, and it's probably going to get weaker. Right now, it's telling me no, I'm wrong in the futures, but sure, it may carry through tomorrow, it may carry through to Tuesday. But we're going to be watching resistance levels, and I'm going to be shorting into resistance. As for Boyle, I purposely don't look at this because I called it wrong, and I took a loss on Boyle. This is a daily chart. Yeah, it broke support again. The trend remains down. I wouldn't buy it here. It's really got to put in a higher low. You got to be able to do this and say, okay, here's your higher low. Nibble at that higher low, and then add more as we begin to break out to new higher highs. That'll tell you that your downtrend is over. But right now, I don't know. I'm neutral on Boyle, natural gas, whatever you want to trade. The charts look the same. And if you believe that we are in recession or heading into recession, will there be more demand for natural gas, or will there be less demand for natural gas? I would argue the reason why oil is down is the concern about future demand. The same thing is going to hold true, maybe to a lesser extent, for natural gas. But I am not optimistic on natural gas at current, nor am I optimistic on oil. I was totally bullish on oil only a week ago, but the rug got pulled out from underneath it. Hi, Bob. What is that? MS? No, that's Morgan Stanley. What's the symbol? SOXL. This is going lower. This is the leveraged ETF, not for the faint of heart. This broke support levels last week, multiple support levels. And folks, if you're wondering what I'm talking about with regard to AI and automated technical analysis, I did not draw these lines here, these support and resistance levels. That's the algorithm. I'm going to take them off. Click of a button. TrendSpider, 35% discount code below. We're going lower here. They may rally them tomorrow. That's all well and good. We'll be looking to short them. Weekly chart. We do have some strong support below at around $13 a share, but I think that they are going to go lower. AMD, SQ. AMD weekly time frame looks really good here. Putting in higher lows. Looks like it wants to break out. Very good price action in the face of some really poor technicals. But if the overall market rolls over, it's only a matter of time before they begin to dump AMD. The thing to remember in a market that we could be going into right now is that if the overall market rolls over on panic, everything is going down. Everything is going down. And the only phrase I could share with you that I've learned from many, many years is that today's lows could be tomorrow's highs. Today's lows could be tomorrow's highs. Think about it. So if you're going home on margin, be careful, because if you're reluctant to meet a margin call because you're hoping for that rally back the next day, that's a sucker's play. If you're on margin right now, you don't have a margin call, you're feeling good about yourself, your bank, your brokerage firm in this market environment at some point in time is going to raise capital requirements. They're going to require more capital in your account for the same amount of buying power. So automatically they're going to trip a margin call on you, even though his stock didn't fall down. It didn't go down because their margin requirements went up. They're brutal. So please be very, very careful. If you're on margin, think about taking advantage of any rally tomorrow. Think about taking advantage of any rally tomorrow to lighten up a little bit. Get off of margin. If you can't sleep, you are too leveraged. So AMD looking good here relative to the rest of the market. SQ. Outside reversal bar last week. We're right at support. Would I short it? No, not yet. If it breaks support at around 68.50 per share and it closes down below that mark, yeah, it becomes a short. Daily view. We're right at support, right there. And in fact, you have one support level at $70.14, another one down here at $67.55. I didn't draw these lines again, folks. Click of a button. I did actually draw a line. I didn't realize I drew this one here. Pretty good, Bob. Those are mine. I do not want to fib. All right, so Square, you're at support. Maybe it'll bounce tomorrow. In this market environment, I'm not looking to carry anything long overnight home. Not doing it. Futures are fading. We're going to go back to that in a moment. Thank you for that, NY Jets. The next Silicon Valley Bank might be in trouble. Is First Republic, okay? This is a special edition of Sunday Night Futures Live. We're going over. We're going to do a 24-hour marathon. 11 and 13-month seed deposits, almost 5. Is that a fact? Really? That's pretty good. No, that makes sense because you're getting 4% on a 2-year treasury. That makes sense. You're welcome, Jody. I expect a fake breakout in the morning, and that's when I go short. You and me both, pal. But I would wait for resistance. We'll add more to our shorts at resistance, and once we get confirmed and we roll over, we break to new lower lows, we lean in. So if QQQ rally back up and fails to 300, load up. Yeah, that's what I'm saying. Yeah, not load up. Again, let's bring it up. Let's walk through this. All right, so here are your cues. Here's resistance right up here at around 292, 293, maybe up to 295. Once we get up there, if we get up there, the reason why you want to short into this resistance level is because you know when you're wrong. Notice how I'm keeping a breakthrough on here. I want to get notified of. The reason is that if I lean in short at resistance, if we close above it, that means I'm wrong. And I may want to think about covering. So if we rally up and into this resistance level, I want to not be aggressively short. I want to put on a measurable short position, but I don't want to get very aggressive until we break here. 287.52. We break that mark, That means that that rally is now faded. We have another lower high. We have a rejection and support, and we have now broken down to new lower lows. It's a validation of our thesis that the path of least resistance remains to the downside, and expect a new downtrend channel to be developing. And there it is. And we are nowhere near the lower band of that downtrend channel. We're much closer to the upper band. MA, yes. MasterCard. This is not looking good. Daily chart, not looking good on a weekly chart. All right, so this is an outside reversal bar. All right, so I have down below, I have a link. 5-part video tutorial on my top 5 favorite candlestick patterns. Free. Not a penny. I will charge you. I just want you to understand what I'm talking about. So if you're not familiar with, whoever's watching this, you're not familiar with the technical jargon I'm using, video below. Free. 5-part video tutorial. This is an outside reversal bar, aka a bearish engulfing, meaning it eclipsed the prior week's highs and lows. We also broke down below the 21, and is this the 20 period? Yes. The 21 EMA, exponential moving average, and the 20 period simple moving average. We do have below the Keltner channel, 20 period moving average on a monthly time frame immediately below. So maybe that'll lack the support, but this looks as though it wants to go lower. Momentum is waning, declining. I would not be a buyer here. Odds favor bears. I'm not saying it's going to collapse. I don't know. You have a couple of support levels below there, but this is certainly not a stock you want to buy right here, right now, because it looks like it wants to go lower. Bob, we got CPI on March 14th. I don't know. I'll tell you. If the Federal Reserve pivots and you get a hot CPI, this stock market's going to tank. Gold is going to rip. Because if they pivot, that means they surrendered to inflation to save depositors of these banks, and we are all going to pay the price. So I would be a buyer of gold. I would be a buyer of the gold miners. I would be a buyer of silver. Equities, no way. No way. Hands off of equities, and no way would I be buying the U.S. dollar. I would be, this is a very, very, initially I was going to say, yeah, it's not that important this week. It's going to be all about the banks. But you know what? No, it's going to be important, the CPI report, because if the Fed blinks and they allow inflation to run hot, and even if CPI meets expectations or exceeds, equities are going to get hammered. Bob, would I love for you to do a deep dive on the banks, one session since all this craziness is happening? I can think about doing it. You let me know what you want information on it, and I can do it for you. Franklin, thank you for being here, my friend. Because Basel, BRICS, and CBDCs are right. This is what they want. They want the CBDCs. That's what they want. This is going to be the perfect. They're going to blame crypto. They'll ban crypto. I'm looking for a bank. Be careful of, they're a fiduciary. They are a custodian of treasuries for the federal government. So Bank of New York Mellon is on this list. Here. Here you go. They have the lowest number of deposited, they have the highest number of uninsured deposits out of all the banks on this list. So Bank of New York Mellon, they're going to see a run. I don't know how they don't. Oh, okay. Wow. Active group tonight. 97% deposits uninsured. Yep. No, they're going to back to the VWAP. Okay. Tim, great show. Thank you, Tim. Futures may be read by some. Could be. I hope they're not. I hope they rally. I have a short position on, but I hope they rally. SQQQ, could you sell calls or buy? Would you sell calls or buy puts? I would just buy the SQQQ. It's like if you buy the options, it's like buying an option on an option of a derivative. It's crazy. I would just buy the shares outright, Dane. Either way, you're getting time decay. And you can sell covered calls to help offset that time decay. R-Train, thank you so much, Bob. You're very welcome. By the way, LABD Pearson, the third standard deviation Bollinger Band on Friday. Doesn't typically make the reversal, even if it's temporary, meaning LAB, it could very well make that pop. Yes. Bob, do you feel GDXU ready? I like that's the mining stock ETF for the GDX. Yeah, that's for the seniors. Yeah, probably. It's probably going to do well. But be careful. These 3X products. Remember, during the COVID sell-off, NUGT at the time was a 3 times ETF. It broke. So be careful of the 3X products. Now it's only a 2X. Fed is paused due to the okay, guys, chatting. Cool. If they pivot, it means they're going back to all-time lows of Spider 350. Yikes, buckle up, folks. There's no yeah. Thanks, Bob. TZ Burton, thanks for being here, pal. Thanks, Joel. Thank you, man. Thanks for your participation. Oh, BX and KKR. Yeah, we're going to talk about that. BX. Blackstone. The thing with Blackstone is it closed at monthly support. The dash lines reflect monthly support on a weekly chart. You have 2 of them below, one at 81.23. Looks as though we broke that one, but the month isn't over yet. And we have another one at 79.04. So I wouldn't short this right now. It may just rally off of that support level. KKR, this is a different product. They have exposure to Silvergate. Support at 48.12. I think it's going to hit it. So it looks like I wouldn't short it here, but it looks like it's going to go lower. Bob has been in fuego tonight. Great shoot. Thank you, sir. Thank you for being here. Everybody, have a profitable trading week. Get off margin, please. Today's lows could be tomorrow's highs. Please be careful. There's going to be a lot of money to be made, but you need your liquidity. Don't fight the market. Please have a great night. Be well.